Bitcoin liquidity is moving in the order book, and today we are going to talk about what it takes to learn and read that order book and what that means for the current trend. Hey guys, it's Keith Allen. Another busy day here today, and happy to be finally getting to the stream here. And yes, in case you haven't noticed, well, first we got a little housekeeping to do. I'm not a financial advisor. I don't give financial advice or investment advice of any way, shape, or form. Trading is risky. Do your own research. Never risk more than you can afford to lose. Okay, so let's get into this, right? So, as the title card that went by very quickly indicated, liquidity is moving, and we're going to talk about. We're going to show you how to read it, how to trade it, and of course, we'll discuss what that means. Based on what we're seeing in the order book now, we'll discuss what that means for the current trend and how things may be developing moving forward as we head into the weekend. And of course, the monthly close coming up midweek next week, right? So let's just dive right into the charts. Okay. So let me get a screen share here. Yes, for anybody who was around yesterday. Yeah, I know I screwed that up and went for like 15 minutes without actually showing the screen. So not going to let that happen again today. Okay. So here we go. Let's go to fire charts. And the reason that I love using order book liquidity to help figure out what the trend's going to be is because, and I do rely very heavily on technical analysis, I should say. But TA sometimes doesn't get respected by maybe some manipulation happening in the order book, in the market, et cetera. And so liquidity is the one thing that I feel like I can rely on most. Yes, there are times where it actually, where something gets rugged or there's some shenanigans going on. But for the most part, we can identify where resistance and support are, and when we can, and the solid moves, right? When a big wall shows up, that's very easy, right? When you see a big sell wall show up, it's pretty easy to know what's going to happen there. Price goes down. When you see a big buy wall show up, price is going to go up. But it's the subtle moves that happen in between that can give us some clues as to what's going to go on. And I'm going to start here on the 3-year chart. And the reason I'm going to do that is because we can gain some perspective by looking at different time frames. Okay. And just at a glance, we can see that we have a concentration of bid liquidity here at 60K, and we have a ladder of bid liquidity that extends down to about 50K and not really much below. Now, I'm a believer that liquidity equals sentiment. So for me, that means that there is sentiment for this 59 to 60K range, and some sentiment to back that up a bit, not a lot, but some to back that up a bit, and not really much sentiment at this time to go sub 50K. Likewise, to the upside, we see sentiment with a really solid ladder of ask liquidity above 69K up into the 76K range. But we're not seeing any really heavy concentrations here. And in fact, if we look closer, we can see that there's been times where the liquidity has moved. And this is an example, right? Let me extend this a little bit, expand on it a little bit. In fact, I can zoom right into that section here. Let me do this. I can zoom into this a little bit and then maybe make this even easier for us to see. So you can see here that this is an area where bid liquidity moved from the 58 to 59K range up to the 59 to 60K range, right? That's kind of a bullish move, right? Support is moving upward. And likewise, some of this liquidity from down here has thinned out. Now, thinning isn't necessarily a good thing. However, when it moves up, that is a positive thing. So some of this liquidity has actually moved up 60K and higher. So that is inherently bullish. However, we also have liquidity moving down from above, which obviously applies some downward pressure. So that is, short-term, bearish. Who's going to win this battle, right? And it comes down in the end to where the most liquidity is stacked. We represent that as colors. The brighter colors are higher volumes of liquidity. And so ultimately we're looking to see where that's going to appear and where that's going to develop. In my opinion, at the moment, we don't have really a strong case to do anything but chop in this range because we don't have a real dominant concentration of bid liquidity or a real dominant concentration of ask liquidity. Yes, it's dispersed, and right now this is the dominant side. But as this thins out, uh, it becomes easier to penetrate. Okay, so it might take days, it might take weeks, it might take months for this to dissipate. Right? These guys get impatient; they start dropping their asks down, trying to push price into these lower bids, and as long as that's happening and it's getting absorbed without knocking us down, then the net effect of that is it's going to thin out and eventually, wear down and be able to be penetrated much more easily. So let's start drilling in to lower time frames a little bit. Okay, so we're on the 3 year. Let's see if we can pick up anything on the 6 month. And again, you see kind of an expanded view of that where we have some bids building here in that 60K range. Good to see. What I'd like to see is a higher volume of it. I'd like to see 100 million show up here, and if not 100 million, maybe it's 60, maybe it's 80, maybe it's 90, and it starts stacking like we saw down here, right? We had 100 and 102 million here and another 106 below it. Okay, this is what you want to see. You want to see really heavy concentrations of liquidity to help send price up. So now to the 1 month chart, things start getting more granular, and we can see more of the subtleties of the moves here, right? So we saw that this level was thinning out a little bit, and then it began to replenish. Replenishing is good. Not only is replenishing good, but also seeing some of this bid liquidity move up higher, also good. Now, the fact that we have had very recently, since yesterday, another chunk of ask liquidity dropped down to the 65K range. That's keeping price suppressed in this range. Maybe these guys are trying to push price down. If they were really eager to get filled, they would just start dropping their asks down in here, maybe as market orders or pushing things down lower into the range so that they could get filled. But my assumption is they're trying to push price down and get filled down here, possibly even close some shorts, right, from up above. There's a lot of shorts stacked up in this 70 to 75K range. Drilling in even further to the weekly, again, we learn more as we go through time frames. And if you're a long-term investor, then you can gain a lot just by looking at this longer term view, right? And you're not worried with all the subtleties that happen in between. But for those of us that are traders, for those of us who maybe are trying to improve our cost basis, our average entry price on Bitcoin, we're interested in what's happening because we can sell these pumps. We can buy the dips and sell the rips, right? Until we get to where we're to what we're looking for, right? So you have to be careful not to overtrade this situation, but there are opportunities in both directions. They just might be as we see um, resistance dropping down lower and support moving up higher. The range to trade is getting tighter, right? And so then you have to evaluate the risk to reward before you move into these trades. It's very, very difficult in the mid 60s, right? If you're down in the low 60s and we see buying happening from whales, then I want to buy. But here in this mid 60 range, it's a little tough, right? I've actually sold everything that I bought over 65K, and I'm now looking to improve on my position. And I've done that. I picked up some smaller orders down in the low 60s and down in 59 range. And so I want to continue to do that if I can. Didn't mean to do that, guys. So let's just move this down a little bit. So what we're seeing here, right? This thinning out eventually translates into less liquidity for us to penetrate up here. It's going to have to get absorbed down here, right? It's not like it's going away altogether, but it's easier to absorb in smaller blocks than it is to try and penetrate hundreds of millions overhead, right? All in one shot. Just not happening, at least not until we see a significantly more bid liquidity coming into this range, 60K or above, to push up into this and really have a legitimate shot of going there. Down to the 1 day time frame. Again, this is where the nuance of the day happens, and the game is really consistent with what we saw on the higher time frame, and that's that uh, we have some continuing liquidity moving up, small pieces of liquidity moving up here that are pushing price or at least holding price up and absorbing what is coming down from above, right? So you can see here with the order flow that at the moment whales are buying. Actually, all classes except the mega whales are buying in this range right here. Mega whales can't really buy because they need more liquidity overhead to buy into. They need some large limit order, and that's easy for me to say. They need some large limit orders overhead to be able to buy into without slippage. So they're waiting for their opportunity. Don't be surprised if price moves up to one of these bigger walls, and you see Brown buying up at that level because they can do so without having to suffer major slippage. But this is good to see. These ladders, these block ladders coming in here is good to see because that is keeping price elevated. So one of the other cool things about fire charts is on version 2.0, which is the one I'm showing you here, is we have this volume percentile filter that allows us to build some contrast in the chart. We can see some of the moves that are maybe a little more subtle and harder to pick up. We can see by uh, filtering out the highest end of volume and the lower ends of the volume. And you can see here very distinctly that we've had some degradation of what's up here, right? If you can see this subtle line here, things were brighter. They started to fade here a little bit, and then another ladder removed, and they started to fade here a little bit. Now, some of what came out of here moved down here, presumably, right? So it's not going away completely, but it's lightening the load and the burden of what it's going to take to cross up here. So what I'm seeing now in terms of what this translates to on the longer term um, is that over time, however long it takes for this to develop, and again, a big block, like I said yesterday, a large block of liquidity could come into either side at a moment's notice, with no notice, actually, right? And just boom, it appears. And it's happened before. There's been plenty of times where we see 50, 60, 100 million show up just all at once. And then we start to see a big turnaround. Um, that hasn't happened yet, but the fact that this area is getting brighter uh, is a positive sign. The fact that we see some of this liquidity from down here shifting upwards above 60K is a bullish sign. And so these guys, if they were confident the price was going here anytime soon, then they would have left everything up here and let it go. But maybe it has something to do with the shorts that are up here that are trying to not get liquidated, and so maybe they're trying to suppress price and push price down to this level, and that's okay, right? As long as whether you want to classify that as manipulation or not is really up to you. If we can identify it, we can trade it. And what we're seeing now is some suppression coming in from above to try and get filled down in this range in the 58 to 60K range, as we've looked on the candle chart many times. I have my I have my long-term cup and handle up here developing this. I was actually debating today what I was going to do the analysis on, whether we were going to look at chart patterns or look at liquidity. And I think the liquidity is more important at the moment. And one of the things that we're seeing here in terms of where that support is, we showed you the 58 to 60K range, which is what this red line is right here, this red bar, if you will, and this white line is the lower low at 59.3-ish on this exchange. Might be a little different on the exchange you're trading, but this is the area that absolutely must be protected. Okay, this is the area that if we can defend this, then we have a nice foundation to move up. If not, we could consolidate in this range for quite some time. If we lose this level, then I'm looking here. Like I said yesterday, I'll be looking for for a potential bounce here. And if that doesn't hold, then I look for a potential bounce in this prior consolidation range. And this one is the one to me that looks like it has the most strength to it. The 44 to 45K range, which incidentally would be a 40% correction from the all-time high. Not saying it's going to happen. And like I said, at the moment, we don't have any sentiment for that in the order book. Look, there's nothing down in that range, or next to nothing, very little bit, a couple million, very little down here to support a thesis of price moving there at the moment. So as long as we stay above this range, we could chop here for a long time until it's time to break out. But ultimately, I think, especially post halving, that we will see the upside here and break through this and head into new all-time highs. Hope that gives you a decent overview of what I'm looking at and how to interpret order book liquidity and how to trade it. Okay. And one of the things that people say to me, a lot of people who aren't familiar might question whether they can gain any alpha out of the order book. And you really can. Okay. It's not just a matter of going, hey, look, here's solid support and here's resistance. It's being able to identify the subtle moves that happen, because these are the things that really clue in and give us an early indication of whether the momentum is going to extend, or whether we're going to see a reversal of momentum, especially here on lower time frames. Okay. And so at the moment, when you see voids like this and voids like this, these are areas where volatility can occur very, very easily. There's very little friction here to slow price down, right? So I said earlier in the stream that liquidity equals sentiment. This is true. And another principle of liquidity is liquidity dampens volatility. And if that's true, then thin liquidity amplifies it. Okay. So this liquidity right here, dampening volatility. This liquidity right here would dampen volatility. It would slow price down. All right. And give buyers a chance to come in and maybe add some support down in these ranges, or even front run it. Whereas if price clears this level, it could get to 65 rather quickly. If it could clear 65, it could get to the 65.5 level rather quickly. But this level seems to be building pretty solidly. My guess, and this is speculative, and quite frankly, it doesn't necessarily matter why it's happening. As long as we can see what it is, we can figure out how to trade it. What I'm seeing here now is this is a range that we're going to chop in until we see more liquidity coming in to break this range, or something, or this drops down and turns into a market order, or it gets roof pulled, whatever the case. I think this is the range that we have through the weekend in this 60K to 65.5 range, unless something changes, of course. But in the bigger picture, it looks like what's trying to happen, as subtle as it may be, what looks like it's trying to happen is, or starting to happen rather, is that bids are seeping up above this 60K range, and that will ultimately do Bitcoin bulls some justice, especially when you see buying happening like this. Doesn't mean that correction can't happen, okay, but does indicate that we have some bullish momentum starting to build again into this range. We have a monthly close coming up next week on April 30th, of course, which happens to be the very same day that the Hong Kong ETFs will go on the market. Okay, so maybe, as I was saying a second ago, one of the things I'm speculating on is maybe some of those investors from Hong Kong are trying to suppress price here, so that when the market opens for them on April 30th, they can buy the lows instead of buying the highs. Just my perspective. That's a bit speculative. Again, it doesn't really matter. As long as we can see where liquidity is, where it isn't, and where it's moving to, we can trade this and mitigate some risk in the process. Hope that helps you out. Hope that gives you some insight as you head into the weekend. With that, I'm going to wrap this one. If I see anything really noteworthy popping up, I'll do my best to give you guys another update through the later today or over the weekend if I have the opportunity to do so. If you like the stream and you like the content, do me a favor, smash all the buttons. I love the comments, so keep them coming, and I will engage with each and every one of them. And be sure and tick that little bell up there, right? And subscribe so you don't miss any of these. Real quickly, another housekeeping note. I've been getting some comments about how I used to do these straight to YouTube. And now and I was recording them and I was writing a long description, and now I'm streaming them live and distributing them across YouTube and X. So I've been getting some comments about the written commentary that a lot of people, a lot of traders really like those. I'm still doing those written commentaries in the YouTube description. So if you're watching this on X or Twitter or whatever you want to call it, I still call it Twix because I think it's transitioning in between, but that's neither here nor there. You will see the written descriptions in the YouTube channel. And like in this example, I actually analyze these charts live in real time for you guys. So I'm going to go back in afterwards and add to what I wrote in the analysis so that is there for you guys to read. Also, for those of you who have trouble with the language barrier, if English is not your primary language, YouTube will populate these with a transcript and you will be able to use the closed captioning button to translate that into whatever language you choose, I believe. So it takes, excuse me, it takes a couple hours for that to process, but once it's done, you can go back and watch and get that translation for you. Hopefully that's helpful for you. Thanks again, guys. I appreciate the support. Make it a great day. Make it a great weekend. Hope you get outside and do something you love with the people you love. We'll talk to you soon.